Oh yeah, tired of your beat up car? Riding your bike around, taking an Uber, or asking your friends to get places where you need to go? Maybe it's time you buy a car.
Hey, I'm Alex,
And I'm Philip.
and we teach you what you need to know about your personal finances using words you can understand without boring you to death.
Because adulting shouldn't suck. If you're new to our channel, make sure you hit that subscribe button and then comments below let us know what your dream car is.
In this video, we're going to teach you how to get a car loan in just 4 easy steps. The first time I ever bought a car, I got totally hosed on how much I was paying for it because I just walked into a dealership, picked out a car that I wanted, and said, that's the one I want. And then I had massive payments, and I ended up paying way more than the car was actually worth because my credit wasn't very good, and I didn't know what I was doing.
Well, it's finally that time of your life where you gotta buy a car.
Or maybe you already have a car, and you're just looking to upgrade.
Either way, if you don't have a lot of money saved up, you're probably going to need to get a car loan to be able to buy that car. But how? Where do you even start?
By the end of this video, you're going to feel a lot more comfortable and confident in the process.
First up, you're going to want to check your credit. You can go to freeannualcreditreport.com and check your credit report. There, you'll see your credit report for the 3 major reporting agencies, TransUnion, Experian, and Equifax. If there's any negative marks on your credit, this is where you can dispute them and hopefully get your credit cleared up.
You're also going to want to look at your credit score. You can do this by downloading free apps like Credit Karma. They're simple to use, and the best part of all, they're free. So the higher your score, the better you're going to have for an interest rate, and the less money you're going to end up paying for that car. If you don't know what your score is, and it's not good, you're going to go and try to get a loan for a car, and you're going to have a super high interest rate, which is not what you want to do. So just think. You can buy a car for 10 grand if you have good credit, or you can buy the exact same car for like $15,000 or $16,000 if you have bad credit. It all comes down to your interest rate.
Next up, you're going to want to get pre-approved for an auto loan. Before you ever step foot on a car lot, you should know how much money a bank's going to give you. It's important because it's going to let you know how much money you can budget for and if you're going to be able to comfortably make your monthly payments or not.
You're going to want to look at different lending options, whether it's a bank like Chase or Bank of America or US Bank or whoever, or you can go through credit unions in your local community, and sometimes they're going to have better rates than big banks. Or you can try an online bank and see if that works out well for you. But ultimately, you're going to want to get a pre-approval from one of them before just going to a dealership and seeing if they can get you pre-approved. When I bought my truck, I had a pre-approval, and then they ran my credit anyways without my permission. And then they shopped it around to like 15 different places, and they actually got me a better interest rate, which I was glad for. I went in with a pre-approval for 5% for an interest rate, and they got me down to a 3. The part that sucked is it dragged my credit score down by like 50 points, which makes a huge difference, by the way. And I didn't ask them to do that. But I mean, it did save me money in the long run. They as in the credit bureaus, claim that if you do this and you shop around for pre-approvals within 14 days of each other, that it's not going to hurt your credit or it'll make like a minimal impact. I don't know if I really buy that because it hurt my credit by 50 points and it took about 6 months for that to fall off and my credit score to rebound.
During this step, you might find out that your credit score or your credit history isn't good enough to be able to get an auto loan, but that's okay. You can ask for a cosigner, or you can put down a bigger down payment so you're not borrowing as much money. Also, little fun fact, pre-qualifications are different than pre-approvals. A pre-approval is an actual amount of money that the bank said they would give you based off of a hard credit pull and your income and all that type of stuff. A pre-qualification is just something that they get with your name and like your zip code, and then they sit it off with a soft credit pull and they say, hey, we will give you something, but how much, we don't really know. So, fun fact. We also made a video, and the link's in the description, on how to apply for a credit card in 4 easy steps. And in that video, we talk about pre-approvals, pre-qualifications, hard inquiries, and soft inquiries. Check it out.
The third step to this video, though, is use a pre-qualification to actually set up a budget. They say that you shouldn't spend more than 10% of your monthly take-home on your vehicle. So, for example, if you make, I don't know, $30,000 a year, you shouldn't spend more than $250 a month on your car payment. Right? So that's how your budget should be set up. But remember, if you can't afford that much for monthly payments, you can always make a bigger down payment if you have the money to make a bigger down payment, because in the end, that will reduce your monthly overall payments you have to make.
Your pre-approvals from the bank is going to state the maximum limit that they're going to give you. But remember, you're still going to have to pay for other fees like taxes and registration. So if the bank's going to give you 10 grand, don't go out and buy a $10,000 car because, like I said, you're going to have to pay for your taxes and registration. However, you don't have to use that full amount. You can get a car for less, and then that's what your loan's going to be for. But, whatever you want to do.
Step number 4 is actually go find your car. So now that you know what your credit is, you know how much the bank is going to give you, and how much you're willing to spend, you have to actually go out and find a car to buy.
You've made it. But make sure you figure out how the bank is going to give you or the dealership that money. Sometimes they'll give you a cashier's check. Sometimes they'll give the money directly to the dealership. But if you're buying like from a person, like private party, then you're going to need to get that cashier's check so you can give it to them. If not, then that person's probably not going to give you their car. So,
I wouldn't give somebody my car if they didn't give me the money.
right.
But if it takes you longer than 30 days to find your car, let your lender know, because they have to actually extend it out past then, because they typically expire after 30 days.
If you liked this video, hit that like button and don't forget to subscribe. In the comments below, let us know if you have any questions.
And make sure you share this video with your friends.
And tag them.